Good morning, welcome to Morning Markets. Today we're going to be focusing on the latest UK employment report and what this may mean for future interest rates. This morning we had the latest UK employment report, which suggests that the overall employment market remains firm and stable. When we look at the unemployment rate, that remained unchanged at 4.2%, and that was slightly better than what the economists were expecting, which was 4.3%. We also had pay growth data, so UK wages have been very high over the last 12 months. We saw wage growth, excluding bonuses, peak at a level of 7.9% over the last year. That has continued to moderate. So the recent data this morning saw wage growth fall from 7.2% down to 6.6%. When we include bonuses, we see a similar trend, continued moderation, coming from 7.2% down to 6.5%. And this is better than what economists and the market was expecting, suggesting that companies are less willing to continue to hike wages up as demand and economic growth in the UK continues to soften. So what do we take from this is that given the moderation in wages, but the employment market is still remaining firm, it does increase the probability that interest rates can be cut sooner rather than later. Andrew Bailey, the Governor of the Bank of England, who is talking today, will be giving his views on the inflation and the employment data that released this morning, as well as the general path of economic growth. He has been very consistent with his messaging of trying to keep interest rates higher for longer until he has sufficient evidence that price pressures will fall towards its 2% target and maintain that level. In terms of what investors are expecting, they're expecting the Bank of England to cut interest rates perhaps as early as May, given the improvements on the inflation data, but also the wage growth data this morning. In terms of tomorrow, we'll have another piece of the jigsaw with the latest UK inflation data. Expectations are for another moderation from 3.9% to 3.7%. Any reading below that 3.7% will expect the market to be increasingly confident that perhaps an interest rate cut comes earlier, not May, but perhaps in March. How did the market respond to the data this morning? Well, we saw some weakness within the pound. It was slightly lower by minus 0.4% against the dollar. We saw positive returns from UK government bonds and a little bit of weakness coming through the FTSE 100. Elsewhere today, we'll also see business and policymaker leaders from around the world gather at the World Economic Forum. This is an annual meeting where business leaders and world leaders come together to discuss the pace of economic growth, inflation, interest rates, and just the geopolitical risks as well. And that takes place at Davos. That's everything from us today. Thank you for watching, and we'll see you tomorrow.